Datavault AI Inc., trading under ticker symbol DVLT on the Nasdaq, is currently changing hands at exactly $2.46 USD, reflecting a sharp intraday decline of roughly 3.53% or $0.090 as we move through the afternoon trading session. Watching the order book right now, the volatility is palpable. The bid-ask spread is widening slightly as traders wrestle with the psychological floor of $2.50, a level that the stock has been flirting with all morning. If you are watching your screen, you can see the red candles stacking up on the 5-minute chart, but looking purely at the red percentage on your dashboard is a rookie mistake. The surface-level movement suggests a typical correction or a risk-off day for small-cap tech. But the reality, churning beneath this price action, is far more complex and violent. This isn't just a stock moving down, this is a collision of two diametrically opposed narratives: massive, almost unbelievable growth guidance versus a terrifying short seller attack that questions the very legitimacy of the company's recent wins. Most investors scanning the headlines expect Datavault AI to be just another run-of-the-mill artificial intelligence wrapper company, surfing the NVIDIA stock wave with buzzwords and little substance. The reality, however, is that DVLT is attempting to pivot into one of the most controversial and potentially lucrative sectors in finance, the tokenization of real-world assets, RWA, effectively trying to turn rocks in Tanzania into digital liquidity on the blockchain. When you open your brokerage app, whether you are engaging in online investing through a sophisticated interactive broker's trading station or just checking the Robinhood app on your phone, the first thing you see is the price drop. It is easy to panic. The expectation for AI stocks in late 2025 is that they should be defying gravity. Yet here is DVLT struggling to hold mid-$2 levels. But let's look closer at the volume. Today's volume is already trending above the 10-day average, suggesting that this sell-off is not just retail exhaustion, it is a battle for liquidity. The stock recently surged over 46% in a single session following news of a meme coin dividend, the Dream Bowl 2026 coin, which naturally attracted a swarm of speculative capital. Those speculators, often trading on Robinhood Crypto Sentiment or SoFi active investing forums, are likely exiting today as the dopamine hit of the announcement fades and the cold reality of the short report from Wolfpack Research settles in. This creates a fascinating entry and exit dynamic. While the fast money flees, we are seeing a peculiar accumulation pattern on the level 2 data that suggests some entities are soaking up the liquidity at these depressed levels. The market narrative right now is dominated by fear. The Wolfpack Research report alleging past criminal activity by management and questioning the veracity of press releases is the kind of news that typically sends a stock to zero. That is the expectation: imminent collapse. But here is the reality check that forces us to pause. Just days ago, Datavault AI raised its revenue guidance for 2026 to a staggering $200 million, up from a previous estimate of $50 million. That is not a marginal adjustment. That is a 300% increase in confidence. Companies that are purely fraudulent rarely invite that level of regulatory scrutiny by quadrupling their revenue forecasts unless they have an ace in the hole. This massive discrepancy between the short seller thesis, fraud/insolvency, and the management thesis, hypergrowth/major adoption, creates the extreme volatility we are witnessing at $2.46. It is a binary outcome stock right now. If the $200 million guidance is real, the stock is fundamentally mispriced by multiples. If the short report is accurate, it's uninvestable. This tension is what makes DVLT one of the most dangerous yet compelling watches in the market today. Let's analyze the technical structure of this breakdown. The stock has broken below its 20-day moving average, a bearish signal that often triggers automated selling from robo-advisor algorithms found in platforms like Schwab Intelligent Portfolios or SoFi Active Investing forums. These algorithms are designed to minimize risk, and when a stock with this level of beta, volatility, creates a lower low, the machines sell first and ask questions later. However, the RSI on the hourly chart is dipping into oversold territory, currently hovering near 32. In the past 3 months, every time DVLT's RSI touched 30, it was followed by a sharp, violent bounce of 15 to 20% within 48 hours. Traders using interactive brokers platform tools to track these oscillations are likely setting buy limit orders right now at $2.35 and $2.40, anticipating a dead cat bounce or a technical reversion to the mean. The resistance overhead is now clearly established at $2.75, the high of the recent range. For the stock to regain bullish momentum, it needs to reclaim $2.60 and hold it for a full session, proving that the bulls have absorbed the selling pressure from the short report panic. The intraday weakness is also exacerbated by broader sector rotation. Today, we are seeing capital rotate out of high-risk microcaps and back into the safety of megacaps like Apple stock and Tesla stock. When the generals lead, the soldiers often get left behind. Fidelity Investments data often shows that during periods of macro uncertainty, like we're seeing with current interest rate jitters, retail investors tend to consolidate their Fidelity mutual funds and Fidelity ETFs into quality names, selling off speculative plays like DVLT to cover margin calls or free up cash. This macro pressure acts as a headwind, meaning DVLT is swimming upstream. It is not just fighting its own bad press, it is fighting a market that is currently allergic to risk. However, this correlation might be breaking. While the Nasdaq is choppy, DVLT's specific news flow regarding the tokenization of raw earth decouples it slightly from the traditional software as a service (SaaS) AI model. It is becoming more of a commodities, crypto hybrid play, which brings a different set of correlations and a different investor base. Now let's shift focus to the company itself, because if you don't understand the business model, you are just gambling. Datavault AI is not building a ChatGPT competitor. They are in the business of valuation and monetization of data and real-world assets. The company operates through 2 main divisions, the Data Science Division and the Acoustic Science Division. The recent explosive news, and the reason for the guidance hike, is their move into tokenizing real-world assets, RWA. They just announced a $7 million minting deal with MTB Mining Limited in Tanzania. The concept is audacious. They're using their proprietary Sumerian technology to create digital twins of rare earth mineral deposits. Essentially, they are turning the ground itself into a tradable digital asset before it is even mined. This is the reality that exceeds the expectation of a simple AI software company. They are attempting to financialize the physical world using blockchain. If they succeed, they aren't just selling software, they are taking a cut of the transaction volume of global commodities. This explains the revenue jump from $2.9 million, which was already up 148% year over year, to a projected $200 million. They are factoring in the transaction fees from minting these massive asset bases. The skepticism, however, is warranted and healthy. To the average investor using investment help services or browsing investing sites for tips, this sounds like science fiction, or worse, a complex hustle. The idea of minting minerals in Tanzania sounds incredibly opaque. How do you verify the assets? Who audits the digital twin? This is where the short thesis gains traction. If the assets aren't real, or if the valuation of those assets is inflated, the token is worthless, and DVLT's revenue model collapses. This is why you see such high insider selling reported in the filings. The CEO Nathaniel Bradley and other executives have sold shares recently. While executives sell for many reasons, tax planning, divorce, buying a house, it never looks good when insiders are dumping stock right before a massive guidance hike. It sends a mixed message to shareholders. A prudent investor using a Fidelity brokerage account would look at that insider selling and hesitate. Why aren't they buying with both hands if revenue is about to go up 10x? This divergence between management's words, guidance raise, and management's actions, stock sales, is the single biggest red flag on the chart. Despite this, the institutional activity paints a slightly less grim picture. Fidelity Wealth Management and other larger custodians have seen some inflows into the stock, likely via passive index funds like the Vanguard Extended Market Index. But there has also been active purchasing by funds like BNP Paribas Financial Markets, who added a significant position recently. This suggests that some smart money is willing to bet on the technology, or at least hedge their exposure to the RWA sector. Institutional ownership remains low compared to a NVIDIA stock, but it is growing from a near-zero base. The involvement of Silex Holding Company as a major shareholder and partner also adds a layer of corporate legitimacy, although the cross-ownership structures can be confusing for a retail investor trying to perform self-investing due diligence. The distribution of the Dream Bull meme coin to Silex holders further entangles the two companies,